Actually got a question for you. What's lightweight, breathes well in the summer heat, and you might want to consider adding to your investment portfolio? Let's bring in Michael Whitney from the Markets Desk with more. I'm guessing you're talking about cotton here.
We are talking about cotton, Carol. Yes, indeed. If you can take a look at the chart here, you can see what's happening in the markets. We've seen very low prices recently that touched down below the 40-cent level. And this 40-cent level is a magic level among traders that they call this the food versus fiber trade, that when the trade goes down below 40 cents, farmers start planting other things.
Why does this happen, though, in cotton specifically, Michael?
Well, it's simple economics 101. Farmers look at prices out there. They can plant anything they want, so they plant other things instead of cotton. They plant soybeans. They plant corn.
So look for where they can make the most money, right?
Exactly.
All right. So what can we expect from cotton prices in the second half of this year as you take a look, kind of look at the trade that we've seen so far?
Well, traders I speak to are anticipating higher prices. We've seen significant declines in acreage in the largest producing countries in India, China, and the U.S. The USDA estimates that China, the world's largest producer and consumer, has decreased acreage around 12%. Now, going into the fall, we're going to be looking more closely at China and the Chinese crop. Estimates vary very wildly as to what the crop is going to be, but analysts, they caution that the numbers coming out of China are very difficult to read.
All right, so difficult to read, Michael. I'm thinking, in terms of price targets, I mean, what are people talking about? Is it going to be tough to make some calls here, or are there some forecasts out there?
There's some forecasts out there. Bell Curve Trading, which is a technical analyst, they see that this 40-cent price level is going to get something that leads to over 70 cents a pound right now, which is an increase of over 30% at current levels. You can see the line here on the graph that's the target right now from Bell Curve Trading.
And you can see how we've come down significantly.
Indeed, and the decrease there was after the global deleveraging, and there was an exodus out of the commodities as a sector. We saw that hit cotton as well, and this is what begat the bull market. One trader told me, hey, it's food versus fiber, buy it and come back in 3 months.
Well, good to know. All right, I'm thinking, I'm sitting at home and I'm wondering, how do I best get, Michael, exposure to cotton as an investor?
Like other commodities, there are exchange-traded funds, solely cotton ETFs. There's an ETFS, exchange-traded fund. You can see the graphic here. There's also the iPath Cotton ETF, which is solely cotton. You can also go to a broader basket, which is the ETFS Agriculture Fund. That has an 8% weighting to cotton. So those are the easiest and simplest way to get exposure to cotton, have it in your portfolio.
All right, so some ways to play it.
Indeed.
Got it. Michael, thank you. Michael Whitney breaking down the latest on cotton. Mark.